All right. Now, continue on with chapter 5. We're making purchases. We also have to understand there's returns and allowances. So, repurchase returns and allowances. So, of course, when it comes to purchasing inventory from our vendors, there's a lot of things that can happen, especially when the items are being shipped. So, other things that can happen is that sometimes the vendors, right? They're pushing in a lot of orders. They may send you the accidentally wrong product, wrong item. Oftentimes during shipping as well is, of course, depending on what shipping they use, they can, kind of be kind of careless with their items. And then you oftentimes you'll find broken items or even defective items. Other than that, sometimes there's even maybe a cheaper vendor or a cheaper supplier that you actually that produces the same quality item, but of course they sell it to you a lot cheaper. So that could be another reason why you want to return something, or also if it's also customer service. So for example, you have this company, you keep calling them because they keep making all the mistakes, and then they just give you the worst customer service. You can already put two and together, and you just don't want to deal with this vendor in particular. So there's a lot of reasons why you would want to return or even get an allowance from this part from any vendor. Okay. So again, we're talking about returns and allowances. Now, I'll talk about the difference between the two, but essentially they actually do the same thing. Okay, so let's go ahead and talk about this more. Now, of course, on a vendor's perspective, they want to keep your business because again, oftentimes is that a lot of vendors, what they say is that you are actually probably one of their bigger clients because you're the one that's buying in large bulks, maybe buying a whole crate of items, or a whole pallet. So you may be purchasing thousands and thousands of items from this particular vendor. So what they're going to do for you is they actually extend and go beyond the limits of how you can return, as well as maybe even receive an allowance from them. So oftentimes you'll see most common vendors that they will try, the main goal is to try to keep you coming back and making more purchases from them. So usually that entails like unlimited amount of return policies. There's no returns on any item. Okay. Other things that you can also, special privileges could include maybe even more discounts. They even might give you even a lower discount price. Other things too is they can have even a money back guaranteed if you are completely unsatisfied. Specials offers could include here, if you purchase X amount of items, I will give you an additional discount. XYZ. So it's also one way to kind of build a relationship, but also keep your business. Okay. So, and oftentimes when this does happen, again, you could be, you can complain about a lot of other things, or if they do send you broken items, or for example, they sent you the wrong items. So here we're going to look at an example on how to journalize a purchase returns, okay, and how it actually looks. So first off, I'm going to first make the purchase in the first place. So again, on January 1st, you purchase 100 coffee mugs from Cuppies Co. and it costs you $1.25 each. Okay, freight costs you $100, and record this transaction. So again, it is on an account. So how do we journalize this?
Purchase expense.
Mm-hmm. Purchase expense. What else? Oh, okay, well,
Friday
uh-huh.
price.
Okay, so this is us journalizing the first transaction, which is these needs to be in some kind of sequence. So you need to make a purchase before you can make a return. So again, this is also us trying to keep track of which items that we've purchased and what can we return. So in this case right here, purchase expense, we know that we bought this on this exact date for $1.25 each. Freight was 100, so you owe them in grand total 225. Okay? Now, here's scenario number 1. Once you received the items on January 5th, you received your items and found that 10 of those coffee mugs were broken. Okay? You request for a full refund on the broken items, and the vendor grants you a full refund. Okay? So, how do we record this transaction? Okay, so you've already made the purchase of the items, but now we are essentially returning the items, or we're getting a full refund for it. So for sure, accounts payable, good. What else?
Purchase return.
Perfect, exactly. Just like what the title says, that's what we're about. We're going to be dealing with a purchase returns and allowances. So this one is a full-on return. Okay, now I talked about there is actually you can have a separate purchase returns and a separate purchase allowances, but essentially this does the same thing. It's a contra account to a purchase expense because you are decreasing the original purchase by making a return. So in this case, we have a purchase returns and allowances, and because given the notion that you're trying to return an item, you can only return the original priced item. You cannot return freight for any reason. So there could be a possible extra cost for you to ship the items out. They also might even cover the cost for you as well. So depending on how your vendor is, in this case, the freight is not included. Okay, so we're going to take it for the price value it was for, which was $1.25, and we're returning 10 mugs, giving us a total cost of $12.50. So in this case, we're going to lower the amount that we owe to this vendor. Okay, because in the beginning, when we first originally purchased it, we purchased 100 of these items, and it cost me $225. In this case, I need to lower how much I owe by $12.50, and then I'm going to have a contra account to go against my original purchase expense, which in this case, the $12.50 is actually going to lower your purchase expense by the $12.50, which is the 10 cups. So instead of having 100 cups left, you actually have 90. Okay? So that's how you journalize the purchase returns and allowances. Okay? Straightforward, pretty easy. You can never return tax. Sorry. If you do get tax, yes, you can return the tax. In this case, you cannot return shipping. Okay? So then let's go ahead and look at scenario number 2 here, where on January 5th, you received the items and you found that 25 of those coffee cups were actually the wrong size. Because originally you bought them for the regular size, but they decided to send you the large cups instead. So here you request for a refund on the extra large coffee mugs, okay? And the vendor offers you a 20% discount, all right? So how do we record this transaction? Now, again, vendors want to also keep their stuff sold. So what they're trying to essentially doing is okay, we sent you the wrong item. However, you can still turn around and sell that item in your shop. It's, you know what I mean? It's not something that you, it's not something that you cannot sell. So in this case, you have special edition extra large coffee mugs. You can still sell those cups. There's nothing wrong with the item. So that is why they decided to say, hey, you can keep the cups and I'll give you a 20% discount because I sent you the wrong one. Are you willing to accept this discount? And in this case, yes, because if it costs you $1.25 each, you're getting a 20% discount off of that original price. So why wouldn't you take this 20% discount? Okay, so how are we going to actually record this transaction?
Accounts payable.
Accounts payable. Yes, because we're paying them on an account. Good. What else?
Purchase returns.
Purchase returns. Good. Good. And good. So we have an accounts payable and we have a purchase returns and allowances. So this is the aspect that I'm going to talk to you about. So we have a return and an allowance. In this case, I'm trying to return the item. However, the vendor was convincing me to keep the items but take an allowance instead by giving me 20% back. Either refund or it could be a credit for a future purchase. Those are more detailed. But in this case, I'm going to be receiving an allowance. So again, essentially they do fall in the same one. Now, question is, why didn't I record it as a purchase discount? So the reason why I didn't record it as a purchase discount is because my original scenario is I'm attempting to make a refund instead, a full return. But the vendor was convincing me to take an allowance. So that is exactly why I do not record this as a discount, because technically they still sold it to you at its original price. However, because you're attempting to return it, they're trying to keep your business, so they just tack on an allowance. So that's the difference between the two. Where the purchase discounts, right? It's already given the discount, right? It's offered to you. It's an incentive. Or if they had a store-wide discount, then that's going to be considered a full purchase discount. But in this case, I'm attempting to return it, and somehow the vendor wants me to be a satisfied customer. So they're trying to do their best to give me more incentives to try to keep my business. So in this case, they gave me an allowance. So again, allowances, again, same thing. Same thing as you cannot discount or you cannot take back freight expense. So in this case, I'm looking at just my original price, which was my $1.25 per cup. And I'm returning or getting an allowance for the 25 that are originally is set for. Now, why is it I'm taking a whole discount on all of them? It's because you're only requesting on these particular 25 cups. Okay? Only 25 of them are actually the wrong size. So you have to be very careful in making sure that you don't take a discount on all of it. You're only taking discount on the item that you are unsatisfied with, or the wrong sized item. So 25 of them, right, costing me at $1.25 is going to give me a grand total of $31.25. And then I'm taking a 20% discount. So that's why I'm going to calculate 25% of the original 25 that I purchased already to give me a grand total of $6.25. Okay, so there you go. So if you actually calculate down this to a boil, you actually get you're getting I think like about 3 cups for free, if you think of it that way. Okay, so there you go. That's why we use purchase returns and allowances, and you're only taking a discount on the amount of items that you're attempting to return, or whatever is the reason why those amount of cups are that you're trying to attempt to return for. Okay? Any questions in regards to purchase returns and allowances? Okay. And that is it for chapter 5.2. So we're looking at purchase returns and allowances. So we looked at the first example that we looked at was a return, a full refund, money back guaranteed refund. Okay. The second that we looked at was an attempt for a refund, but you actually got a discount off the original price for those items. So again, you need to make the purchase in the first place in order to create the rest of the items. Okay, so there you go. And again, you cannot take discounts off of freight or anything like that. And that is pretty much it for chapter 5.2. Any questions? Go ahead.
So purchase return and allowance is considered to be a contra.
Correct. It is a contra account because it does lower the original purchase expense in the first place. If you bought them for originally, again, 100 items, right? By returning the items, you don't have 100 items anymore. So this is a contra account that allows you to decrease the main account, which is the purchase expense. So yes, correct. That is a contra account. All right. Any other questions? Okay. All right. So let's go ahead and do the 5.2 chapter 5.1, but with a little twist on here. So number one says journalize. So scenario here is I'm going to assume everything is going to be on an account. So number one says here, scenario number one is going to be on April 5th. We purchased 5,000 units at $5 each with a freight cost of $100. So assume every transaction is placed on an account. So how do I journalize this?
The purchase expense.
Purchase expense. What else?
Freight costs.
Freight expense. Okay, what else? Accounts payable, good. Now let's go ahead and calculate the total amount. So what's my original purchase expense going to be for? Correct, $5,000. And my freight cost me,
100.
giving me a grand total of,
5,100.
good. Now here, this is where you can make your description so then you can keep track of every single item, right? So here I actually purchased 1,000 items or units at $5 each. Okay? Now, what happened in scenario number 2? On April 7th, you returned 200 of the damaged units for a full refund. So how am I going to journalize this?
Account payable.
Yes, we're going to decrease our accounts payable. So this is also assuming that, of course, which one are you going to be actually accounts payable? So in this case, yeah, this is going to be reflecting for my one and my only purchase that I have here, which is on April 5th. So April 5th, April 7th, I have a return. And then what is my credit account going to be?
Purchase return.
Good. Purchase returns. Purchase returns and allowances. Okay. So how much is my total going to be? If I return a total of 200 damaged items or damaged units for a full refund, How much is that going to cost me? Or how much am I actually getting back in this kind of sense?
1,000.
Yes, you're getting back a total of $1,000. So that means it's going to decrease your the amount that you owe by $1,000. Okay? And of course, you're returning a total of $5,000. So here, this is where you could also make a note here that you returned 200 units at $5 each, full refund. Okay, there you go. So then when we take a dive into our next section, which is the 5.3, we're going to look at utilizing the inventory worksheet and what we actually do with this information. Okay. So then on April 10, you purchased 750 units at $5.75 each. Freight cost you $75.
Purchasing.
Yes. So I'm going to save some time here. We're going to have a purchase expense and a freight expense, okay? Now, how much is my purchase expense going to be for?
1,300.
4,312 and 50 cents. Okay, and then freight was, how much was freight?
75.
75, bringing my grand total to be
4,387.
And of course, I'm going to make a note here that I purchased 750 units at $5.75 each. Okay, and this is also going to make it a lot easier for you, especially when you're journalizing your transaction. Is you can go ahead and pop up here and be like, okay, so I originally purchased it for $5.75 each. So if I were to make a return, which in the next scenario, on April 15, you end up returning 50 broken mugs due to shipping, and you got it for a full refund.
Accounts payable.
So yes, you're going to decrease your accounts payable. So this is 415.
Yes.
Sorry, I unlocked my my number lock. So 415, and you're going to, again, you are going to decrease your accounts payable because your original purchase that you have right above it is generally going to be what you're returning. Now, here's another rule of thumb too, is generally, usually the return or the allowance happens within the same week or within a couple days of your previous purchase. I'm not quite sure if it's very common for a lot of people to dip into the same original purchase and start returning left and right from that one. Oftentimes, no, that's usually not a scenario or a case like that. It's mostly due to the first one. Obviously, when you first get your items, your first thing that you should do is you're going to open all the boxes just to ensure and inspect that every single item is either working or there's nothing wrong with them. That's a good business practice, but sometimes that doesn't happen all the time. But usually the returns and allowances happen for the previous batch that you just purchased. Okay, so again, we have accounts payable. What is my credit account going to be?
287.50.
So for 287.50. Okay, and how did you calculate that?
We only returning 50.
Yes, so we took the 570
575 times 50.
to get the 287.50. So again, my account
Purchased.
for the 287.50. Okay, good. And then returned 50 units at $5.75 each for refund. All right. Let's look at the next couple ones. And the next one is on April 20th. We purchased 200 units at $6 each, freight costing me $20.
So purchase expense.
Good. So here we go. Put 420 here. Purchase expense. Okay, and what else is going to happen?
So your purchase expense would be $1,200.
$1,200. My freight,
And then 20.
giving me. All right. And I'm also going to indicate that I purchased 200 units at $6 each. Yeah. Okay. So then again, what happened on the 22nd of April is 25 of the units were the wrong color. Okay. But you're willing to accept a 20% discount. So how am I going to journalize this one this time?
Accounts payable.
Yes, always going to be is that you're going to attempt to gain your money back in this case. So this was 422. So we're first thing that we're going to recognize is our accounts payable. Okay? And how much is going to be my total amount that I'm actually getting back? So if I'm trying to attempt to return 25 of them because they were the wrong color, but I'm willing to accept the 20% discount. So how much is my actual amount I'm actually going to be refunded for? $30.
30.
Yes, $30. Oh, yes, because if my original cost me $6 each, right? 6 times 25 gives you $150. Now, I'm not refunding this entire amount. I'm only attempting to try to get 20% off of the original ones that are actually incorrect. So in this case, I'm only taking 20% off of my $150 total, which is indeed $30 in total. Okay. And then with that being said, what is my account going to be here?
Purchase returns and
Yes,
allowances?
purchase returns and allowances. The whole purpose of this entire section here, purchase returns, but this is going to be considered an allowance more than an actual return. Okay, and again here, 20% discount on actually no, I'm gonna reword that. I'm gonna say returned 25 units at $6 for 20% discount. Okay, disc for short. All right. And then last but not least, on April 25th, you purchase a total of 500 units at $6.25. Freight's going to cost you $50. So what is my journal going to be here?
purchase
Purchase
expense.
expense.
Correct. It's going to be for the purchase expense and the freight expense. And I'm going to add one more column for that. For 425. What's my total going to be for my purchases?
$31.25.
$31.25 plus $50 freight
Yes.
gives you a grand total of $31.75.
75.
And the last thing is I'm going to make a note here is purchased 500 units at $6.25. Okay. All right, good job. So that's actually looking, so in grand total, we got to look at how to make a purchase of periodic inventory, which is through the purchase expense, okay? Other factors that we need to also remember is that there's possible chances of us taking a discount, okay? And there's also opportunities where we actually attempt to make a return for a full refund or even receive an allowance from the vendor itself. So there you go. All of these accounts that we looked at are all going to be the original one is the purchase expense, and then everything after that, so a purchase discounts, a purchase returns and allowances, a purchase discount loss. All of those are all going to be contra accounts, and they all their whole main purpose is to decrease their main account, which is the purchase expense. So again, these are all reflecting the original purchases and decreasing them by saying I don't have it anymore or by lowering the amount that we owe. So that is it. Any questions in regards to chapter 5.1 and or 5.2? No? Okay.
No.
Okay, what was that?
No
No questions. Okay, so I'm just gonna leave it at that. We because tomorrow is going to be a little more longer, a little more I guess more intense concept to learn because we will be looking at utilizing our inventory worksheet for the first time, and we're going to be looking at how to actually calculate the cost it takes to every time we sell an item. So with that being said, I'm just going to leave it as is. Happy Monday to you guys. You guys are free to go unless you have any other questions. But if not, you guys are free to go, and tomorrow is chapter 5.3. Okay?
Only one chapter tomorrow.
No. We have 3 more things tomorrow.